Next up on our list is Super Group, which is a little bit more focused on this line of business because it's in fleet management, supply chain logistics, and car dealerships. I think it's got about 50 or 60 of those dealerships. I might be getting that number slightly wrong. Market cap of this one is smaller, 10 billion rand, so not an enormous company, but it's had a fabulous run in recent years, recovering from a very tough patch it went through about 7-8 years ago when it had to do recapitalizations and share consolidations. It has a dividend yield. I'm not quite sure. I don't think it's been in dividend distributing mode lately. I'll check on that. But its price to earnings ratio is 13. So, Gary, I mean, as I said there, a phoenix-like recovery from that blowout it had some years ago.
And I think it was backed by Allan Gray when they took up their rights. And, I mean, it's done spectacularly well as a turnaround story. And, I mean, we don't like to buy turnaround stories. I think management here is now, sort of entrenched that they're good. They've shown what they can do. And, I mean, if you look at the share price chart of it, you can almost predict where it's going just by drawing a ruler. It's very stable, uptrend.
It's a brilliant chart. I mean, there it goes, cruising. But that's to be expected, given that they ironed out all their troubles. They did a lot of house cleaning. Peter Mountford is an ex-Imperial guy, I think. They got, a whole lot of stuff done. They're doing well in Australia. SG Fleet.
No, SG Fleet, they just listed in Australia last year. But, I mean, if you look at it, it's still South Africa, the bulk of its operations. I mean, African business is less than $500 million. Australia, I think, is about 1.5 billion. South Africa, I think, is 12.5 billion if you're looking at revenue. So, South Africa and Southern Africa still really the focus for Super Group. And I mean, they've been quite vocal about their expansion into Africa as well, which now I don't know how the oil price is going to affect them, because a low oil price, obviously good for logistics, good for the consumer in South Africa, but bad for some of the territories they might have been looking at.
Will it be positive for them in the sense that they have like fleet management relationships where they take risk on the fuel price, I wonder? I mean, is it really a bottom line benefit for them with cheaper fuel?
I think even if you look at just at the motor retail, I mean, there it will be a bottom line benefit for them because of the extra money in the consumer's pocket. I mean, the whole industry is turning around, and that will definitely help them.
So that could be a net marginal increase and as we know, I mean, the fuel prices coming down is only fairly recent, but as the new year comes in, as people perhaps get the benefit of increases, they can perhaps afford a little bit more car. And we know there's a lot of people in South Africa that would love to own their own car so they could get out of the damn taxis, but they can't quite get there, and the sort of 1,000 rand a month is a bit much, but you can get a little bit more car. That's a big thing.
Definitely. And I mean, if you look at it, the whole industry, I think, it's gone through very difficult times. We've already mentioned the weakening currency. I mean, fuel input, it is a major input into all of this. You read all the chairman's statements, the high petrol price has always been a concern. Rate hikes is also a big thing for the consumer, which feeds into the motor retail. And now suddenly with the lower oil price, you're also looking at a potential rate cut that could also feed into it. And I think, like I said, the sector is a very competitive sector, a very efficient sector. And if you can just, the environment gets a little bit better, I think these guys, like you said, it's cyclical. They can make a lot of money then. So starting to become exciting.
And this share price tells its own story, so can we stay hot on Super Group?
I think, I'm going to stay hot on Super Group. I mean, you can see it, if you look at their HEPS, I mean, they've had a compound annual growth rate, I'm not sure how many years, but it's like 27%, I think, over the last 5 years. So they're doing very well, and we expect them to continue to do well.
Good, excellent. So we're going hot on that one.